Hey, this is Charles Freeman with Adapt First Investing, and as many of you know, I'm a proactive investor and have a forward sort of looking view about portfolio management. I do a lot of research and look at expected probable returns kind of going forward, but also looking at history I think can help us manage those expectations and give us an idea of things that have happened in the past and that could repeat in the future. And Bloomberg had a great chart this morning that I wanted to kind of share with you. Basically, we've had a great start to 2019, and the market has gone up pretty substantially, and they put out this chart that looked at similar positive starts to the year and what the subsequent returns were after May. May has kind of been a transitional month in the market, and you might have heard the term sell in May and go away. And this chart actually shows 10 other years where we've had a similar start to the year in the first quarter, and then actually what happened from May to the end of the year. And in actually 66 of those instances, we've actually had flat to negative returns, and in 4 of those instances, we've had positive returns. Interestingly, I was thinking about 1933, the first bar there, and that was around the time of the Great Depression, and the market was incredibly volatile during that period. So in a way, I kind of feel like that's sort of an outlier as far as the data. And in 1998, actually, that was my first year investing. I was living in New York City, and that was the height of the internet boom, and 98, 99, and then we had a subsequent crash in 2000. But what I wanted to kind of share with you is that basically May can be a transitional month, and we may or may not see those same kind of returns that we've had in the first quarter. But what does that mean for your portfolio? Well, that doesn't necessarily mean that even if the broad market sells off, that there are not opportunities to make money. There's just opportunities in different places. And that's why I believe in sort of a proactive approach to investing, to where you want to try to look at and see where the best opportunities are and what's the highest probable returns. And it's not always in the stock market. Sometimes it could be the bond market. Sometimes it could be commodities or currencies. So it's important to have a strategic outlook and sort of weigh those risk-reward probabilities and position your portfolio accordingly. So this is Charles Freeman with Adapt First Investments. I hope this has been helpful, and I'll see you next time.